Hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friends Courtney Truss and Sam Clement. Y'all say hello.
How's it going?
Hey.
Hey, guys, I'm doing fantastically. It's been a wonderful spring thus far. Now that spring is finally sprung. However, what has also sprung, Sam and Courtney, as you well know, mortgage rates
That's
and
right.
their overnight lending
Oh
target.
yeah, exciting stuff.
So I like everyone. I'm sure that you all maybe not Courtney has gone on to the Zillow. The Zillow shows how old I am. Gone on to Zillow.
On the machine.
Onto the magic box and taking a look at Zillow or Trulia or some of the other ones, and seeing the estimated market value of our houses just go through the roof, and it makes you feel like a zillionaire, just a little bit. But Sam, Courtney, what happens to the market value of real estate when interest rates go up as they are?
Well, it's not great. It's not great for prices. Obviously, mortgages are such a big part in the housing industry. It's pretty difficult to get a house without one. No one's, for the most part, paying cash for them. So this is how people buy and sell houses is through mortgages. So when the cost of a mortgage goes up several percent in what seems like a couple weeks, but really a couple months,
People's buying power is going to go down.
I mean, I saw when rates are like 2 3/4 versus 5 1/4, someone could have bought a $700,000 house previously, and that same payment now only gets you a $500,000 house. So clearly, that is a big swing in mortgage rates, and that's a big swing in purchasing power. So it's gonna have an impact. It's impossible not to.
Well, Courtney, I mean, this really derails y'all's plans to build that, that 12,000 square foot house that y'all are putting up there on top of the mountain?
The pool and all the tennis court. It was going to be wonderful.
Not anymore.
Not anymore.
So have you been looking? Have you taken a look on Zillow, on Trillium, take a look at the value of your home?
We have looked at the value of our home. We are not in the place where we want to move, nor as you make comments on when you acquire a bunch of children or have a bunch of children.
Acquire.
So where are you buying children these days?
Exactly.
I thought that was sort of against the law, wasn't it?
They just keep showing up.
Cabbage Patch.
No, but it's just so much stuff to move, and I do. I have a family member who is moving, and pricing her house, she was able to get, significantly more than asking in 2 days. With it on the market, and I think, yes, that's awesome, but you're also buying, right? Most people are selling to buy.
Well, she's not buying locally, though, I don't think.
Correct, she's not, but
the whole real estate market, though, and how it's been over the last couple years and really last couple decades outside of the housing crisis has been really two trends. One, not having enough houses. There's not enough inventory.
Right.
And two, rates have just continued to drop. For decades, rates have dropped. People were talking about 15+% interest rates on their mortgages.
Yeah.
And less than a year ago, people were talking 2 3/4. And it's been pretty much downward in one direction, and inventory really hasn't picked up enough either.
Well, that's kind of where we are right now. And here, as the Federal Reserve starts raising the overnight lending target, Mortgage Brokers Association trying to take mortgages a little bit higher. I think we're 5% now on a 30-year. That's a pretty big move. And you have a lot of home builders and people just kind of scared that this is going to burst the bubble in the housing market, if there is a bubble in the housing market, because as interest rates go up, what people can afford will go down. It's just nothing more than that.
Yep.
Say, for instance, you have 4% mortgage on a $400,000 house. What is that? That's $16,000 every year. You don't move it to 5%. That's $20,000. So if you do the same, when I pay the same debt service, then you can only afford a $320,000 house. So that's the sort of thing that's going on. And you have people concerned that gee whiz, housing market's going to fall apart and all that. It's going to be 2008 all over again. And when the housing bubble bursts, and Sam, Courtney, I've got to tell you, while prices have gotten very inflated, and we'll go back to that in just a second, the tea leaves right now suggest that the housing market, Courtney, is not a bubble, but Sam, more of a balloon.
I know, you used that last week. I like
so, letting a little steam out of it is actually not a bad thing, all in all.
Well, it
but
seems
you
like
can pop a balloon too.
Not if...
Hey,
I'll tell you what. When we come back, excuse us.
but you are right in that there's some significant differences. Between now and 2008, like factual differences. One, floating rate mortgages are not nearly the size of the mortgage market that they used to be. That was a large part of the issues in 2008 is when rates started going up. People with floating rate mortgages, and
Yeah.
loose lending standards could no longer afford these houses. Lending standards are much more strict than they were. Floating rate debt is a lot smaller percentage of it. And your fact that we've talked about HELOCs and banks and that not being as big of a portion of their balance sheet, all these kind of come together and add up to it's different than 2008.
There will be a slowdown in residential real estate prices, maybe even a slight pullback. But it's very difficult for me to get back to that 2008 sort of type collapse where the housing market didn't come back for years.
Yeah, and we
Right.
again those two trends in real estate, especially residential real estate. Now we talked about rates going down for decades. Now they're kind of going up, at least in the short term. But inventory is not really getting any better, and
Well,
that's the second piece of the pot.
Well, the inventory is not anywhere near as great as it was, but the inventory is also being a little illusory right now, and the fact that most home builders right now aren't counting their in progress. All their in progress stuff is inventory, just what's available currently for sale. So there's pipelines still pretty decent. So there's maybe greater inventory out there than what we think there is, but at the same time, it's nowhere near what we had. Again, going back to the housing bubble burst, and kind of like what we were talking about recessions last week, what a recession means to us. We were talking about how people view recession as 2008, and which obviously is financial crisis brought on by the bursting in the real estate bubble, all that stuff, and that's what people are kind of assuming right now. Here we've had prices go up and up and up and up. If they come back down, surely all hell's going to break loose. The devil's going to come to dinner. All that bad stuff. And unfortunately, or fortunately as the case may be, that just doesn't seem to be the case. Now, Courtney, when you're at the ballpark, when you're having cocktails or dinner with friends, surely this is not the topic of conversation.
No, I think we have actually talked about several people who have been inclined to go ahead and sell now. But I also think that there are people that are like, as they know the interest rates are going up and maybe they've been looking for a while and couldn't find anything, they're going to be more inclined to just fix what they currently have. If they like their location, their kids are in school or something like that, they're more inclined to invest in their current house than maybe buy new.
And I think that's a trend that we've definitely seen. And, you can see it in the stocks of
Right.
companies that are doing those kinds of things, whether it's a Sherwin-Williams or Home Depot when they talk about their different market segments. That is something we're seeing. And with rates, again, having gone so low, you're right. It seems like a lot of people are probably not stuck, but kind of stuck in their home with the rates that they had. I mean, people had two goes at it to get a rate under 3%.
Yeah. So it's like if they refinance, they're probably more inclined to be like, hey, let's
if
take
your
that
rate's
extra money
under
and fix it up.
3% and you're seeing it at 5.5 right now,
You're not going to refinance.
Yeah, and that's part of it. There's going to be essentially no more demand for refis. I don't know who would be refinancing now. That market
You would have to have a dire need for cash.
Yeah, it would be cash outs all. Yeah.
That's it. But I mean, you're absolutely right on that. And the thing with residential real estate, it's always been a mantra. It's location, 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 and interest rates. And certain markets are going to get hit a little bit harder. Certain zip codes here in the Birmingham area are going to get hit harder. I'll tell you a little anecdote from me. I looked into buying some property over in Charleston, South Carolina, which apparently is one of the hottest markets on the planet. I've got a child that lives over there and trying to rent, and rents going up, 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 up. And I'm going, a two-bedroom, two-bath condo renting for $2,500, what have you, in a Mount Pleasant or something like that. I'm going, maybe Beth and I can, along with my brother-in-law, buy a piece of property, and that way we can maybe enjoy the equity instead of paying the landlord. We can pay ourselves our equity, if you catch my drift.
Yep.
But I realized that something had to give in the market. When the last piece of property this gentleman showed us over there, nothing wrong with the property. Courtney, it was a two-bedroom, two-bath duplex on James Island. Showing us for $360,000 or thereabouts, and I'm going, kind of breathing a little bit hard for 1,000 square feet. That's $360 per square foot. If you live in Manhattan, that might not sound like that much, but if you live in the Deep South, you're going, boy, I'm swallowing hard at that.
Yeah.
And then you take a look at the history of the property itself, And Courtney, that house sold in December of 2021 to this person for $251,000, and now they're trying to flip it about 3 months later for $360 because they can.
Exactly.
And so
And that's all houses are, is what someone will pay for it.
without a doubt. So that's when I realized. I told the real estate agent over in Charleston, I said, we're just going to take a step back here.
Yeah.
It's not that we're not going to be interested in the Charleston market at some point. We're just not going to be interested in the Charleston market while people are able to flip homes like that. And an increase in the overnight lending target, an increase in mortgage rates will slow down that flip, if you catch my drift.
So do you think that more people will? I mean, we've talked about kind of 2020, there was a surplus of cash, right? I mean, not everybody, but certain.
I was about to say, maybe it's your
No,
house.
well, no, but we talked about like how people weren't traveling, right? People weren't spending money on those extra things, so that we did see more. Maybe they bought a nicer car or something like that because they weren't going on trips. Do you foresee people who have maybe some extra spending power? They see the volatility in the market. Maybe they take some cash out and they're waiting to pounce, kind of to your point, John, about when the market goes back down, and they can, that $360,000 house is not going to be worth that, so maybe they get it for $300,000. They kind of wait it out, or you sell your house now at a premium, knowing that
Well, that's a perfect analogy for me, because I'm just
Buying
curled
it
up
at
and
the-
just ready to pounce. I think like a cat.
You're spot on, though, and that's, again, part of why things are different, is that there's a lot of people that'll be willing. There's a lot of demand, whether it's on the sidelines or somewhat in the market. There's still a lot of demand chasing too little inventory.
Right.
And I get inventory isn't that bad, but there's still a ton of demand for houses, and we're not producing enough houses to really fill that demand. I mean, a stat in the Dallas Morning News came out that this time compared to last year, there's about a tenth of the homes on the market in Dallas. That is a shocking lack of inventory.
Yeah, for sure.
So I mean, and Sam, if I'm not mistaken, a huge chunk of that is just people do have, to your point, Courtney, a lot of cash, a lot of sort of LLCs and pools of money going around and purchasing up properties because there's a lack of other investments out there. Just too much cash chasing too few assets, and as a result, people will buy these homes, turn them into rentals, or just wait until they appreciate a little bit more, then flip them and go on to the next thing.
I think everybody knows someone, or maybe it's themselves, that is saying, okay, I locked in my current house at such a low rate. Whenever I need get a bigger house or move, I'm just going to rent this one out. I mean, it is too cheap for me to get rid of that. I think everyone knows someone that's been in that position or said that. And that's going to contribute to lack of inventory too. I mean, and that's just anecdotally, but it's hard for me to imagine there's not a lot of people saying, this is so cheap for me to own this. There's no reason I should ever sell it.
Well, and I think people feel like it's a good investment too. I mean, it's less volatile than the market, and that might be a better way of them kind of securing or keeping that money, in a safer.
The best part about
option,
houses
whatever.
as investments is that they're extremely illiquid,
Yeah.
and that you can't go out and sell it when you see it go down one day.
Years ago, back in 2005, 6, 7, I got into some hot water. I used to write a column for the Montgomery Advertiser, and housing prices were going through the roof down at the Gulf and all that stuff. And people were saying the quickest way to get rich is just to buy a condo at the beach and then flip it for 100% profit and what have you. And, it's easy for you to say, I guess. It's a little bit more difficult than that. And I wrote something in the newspaper about how, in terms of just the amount of appreciation that you should imagine just in your standard market, is nowhere near 10 to 15, 20% every year.
Yep.
It's a little bit closer to maybe 3 to 5, depending on where you are. And boy, you wouldn't imagine, you couldn't believe the people that emailed me just tell me what they really thought about me as an individual. Just, I didn't know what was going on. I was a fool. I can't believe you were saying this type of stuff. Housing goes up double digits every year until it doesn't. And so I would say kind of, in terms of just the average person wants to be a long-term sort of homeowner, not someone who's coming in and trying to flip when the market's all raging and whatnot. A 3 to 5 sort of percentage point increase in your residential real estate if you live in a standard market. It's probably what you should kind of forecast in. That doesn't include the equity that you're building by
Sure.
paying down the debt. However, if you're in a place where people really are moving to in droves and continue to do so, places like Austin, back in the Lone Star State,
Charleston?
or Charleston or Nashville or Charlotte or what have you, I mean, that gets down to the shortage in inventory that you were talking about.
And historically, I mean, Case-Shiller Index, there's like over 100 years of data for this. Typically, those prices go up about the rate of inflation. Mm-hmm. So for people to expect double-digit growth in a residential market year over year over year, we have tons of data on it. That's not something to be expected.
Well, I mean, I don't know about you all, but Beth has been tempted to look at a new piece of property and all that stuff. This is something that I don't find enjoyable. Looking at
the money
properties and all that stuff, and the thought of moving drives me into apoplexy. But I don't know about you all with this frothy housing market. Have you all been tempted to sell and look at something else?
Well, it's kind of like selling one expensive stock and buying another. It's where are you going to go? Mm-hmm. I mean, unless you find some fantastic deal that is underpriced in the same market that is overpriced for your house, you're just kind of trading things around. And then now your rate's even higher if you're going to do it now.
Yeah. And you have to think, I mean, you now only have 2 people in your house that you would have to move, right? Maybe some residual stuff from your 2 children.
I've got
the fish.
The fish died last week.
Oh, no.
Sad.
Boy, I tell you what, Beth was not thrilled when I flushed it. That I figured watery death, watery grave, all that stuff. But Courtney, you're right. While there are only 2 people in the house, there's still 4 people worth of crap in the house,
yes.
Which means all has to get boxed up and all has to get moved. So
yeah, when you think of the logistics, and obviously, like I told you, my family member, like going through and getting rid of all your stuff or boxing it up, it is a ton of work, and that is not something that I think is worth. And to Sam's point, I mean, you're selling high, but you're also buying high. So, it's still a significant change. And more than likely, you're buying up, right? So it's still preparing for.
But it does seem like
cost.
A lot of people are saying they're going to wait until the market cools down a little
yeah.
bit.
The thing is, that's almost a self-fulfilling prophecy.
Yeah.
If enough people say we're going to wait until the market cools down, guess what?
It's going to ramp back up again.
Well, the market's going to cool down if everyone's sitting on the sideline.
But there's going to it's going to probably be mitigated too in how much it can cool down.
Right.
If there's so many people,
waiting.
Everyone's going to be afraid that they're going to be late to that party.
Fear of missing out.
Yeah,
So
yeah. I mean, it's a real thing, and if there's enough people wanting to wait for a pullback, it often limits the amount of a pullback in any kind of market, whether it's a stock, home, or
and you're still going to have that many people trying to pounce on whatever comes to the market, and it's going to drive the price up again.
So I mean, the thing is, with whatever steam gets let out of the housing market currently due to the Federal Reserve raising their lending target, the mortgage industry trying to drive rates a little bit higher, whatever steam that gets let back out. If history serves as a guide, Courtney, and I'm supposed to say historical performance is not indicative of future results, but if history serves as a guide, whatever steam gets let out of the housing market because of what's going on with the Federal Reserve right now, that balloon, if you will, and don't stand near it with a pin or whatever, needle. Don't
You're
try to
talking
get
about steam. I guess we're really talking about helium.
Yeah, okay. We'll talk after this.
Yeah. Off the
rails. But that balloon will eventually fill back up. And that's just what happens as the population of the United States grows, and as we move from one region to another region, and as taste and housing change, and as things depreciate and all that stuff, there will always be a demand for housing in the United States. And as a result, if that's the case, housing prices have a long-term tendency to go up, even if they do correct sometimes. Sam, your thoughts?
I mean, they've only pretty much gone down twice since we've been
pretty much.
I mean, maybe here and there, but there's been 2 significant times where housing prices have dropped.
Do y'all think that part of it also is higher demand due to, is it first-time home buyers like young couples, or do you think it's also because the divorce rate increased in 2020?
Is there trouble in paradise?
No, not at all.
But there's also a ton of COVID babies too. So
there's not though. The actual increase wasn't that high.
Okay.
I think it depends on certain areas.
How old's your daughter?
I didn't say that I didn't have a COVID baby. I'm just saying that it wasn't a boom. Do you think there's a higher demand because people did get divorced, so instead of one household, you have now 2 households?
I'm not aware of the I think you're probably at the age where you are. You're probably starting to see the first of your friends getting divorced. You know.
Yeah.
I've already kind of seen that, and by this point, heck, you're just stuck with me. You know?
Yeah.
Past the windows.
Yeah, you're too tired to start over.
too tired to go start off another relationship. So I think that's where you are in your stage of life. I would say that. In terms of housing, just in general, I don't know about divorce rates or baby booms and all that stuff. It's just ultimately it does come down to location and interest rates and whether or not people are going to move there. So, Birmingham hasn't been as hot as Austin and Nashville, but probably been a hell of a lot hotter than Aliceville, or some such place.
Yeah.
So. I don't know. I mean, anything else on this topic before we start closing things up?
I think that's about it.
All right, guys. Thank you all so much for listening. We always love to hear from you all. So if you have any questions or comments, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us the review on the podcast outlet of your choice. As always, if you're interested in reading more or hearing more of what we have to say or how we think, by all means, please go to oakworth.com and take a look underneath the Thought Leadership tab for all kinds of exciting information. With that, last chance?
That's all I got.
I think I gave enough.
That's all I've got today, too. Y'all take care.